All right, welcome to March 2nd, Monday, March 2nd, the year of our Lord 2026. Let's get right into it because we don't have much time. We only have about like 20-ish minutes or so. So we'll just quickly go through what's reporting this afternoon and tomorrow morning. And then I will pivot and look at earnings pick'em and maybe dabble in a little EL bucks. Maybe place a little bet, but we'll see. So without further ado, let's look at the deep dive. Like I said, we don't have too much time, so we'll do that as soon as we can. All right. So this afternoon, we can see we have MongoDB, we have Credo, and we have Dave. So 3 from our top candidates, our top 6 this week. We definitely need to look at all 3 of those as they are all consistent movers and pretty high EL scores. So first, let's look at MongoDB. MongoDB, as you guys know, if you trade earnings, you know that this stock is in the Hall of Fame. It's probably like it might even be top 1. It might be 1 or 2. Mongo, Deck, these are all very consistent earnings movers. And as such, you can see it has a killer grade, an A-, and then like a really high score, one of the highest EL scores I think I put together. One thing that you're gonna have to do this week with MongoDB, so you'll see the options chains are gonna be juiced, and that's because everyone else knows that MongoDB is a consistent 10% mover. So what you see in these strikes right here, this 450 call and the 200p, I can almost pretty much guarantee that these are being sold. Those are positions that are on the bid. So traders do not expect Mongo to get to 450, and they do not expect it to get to 200. So you're probably looking at literally like a $30 to $40 move up or down. So like the 350, 360 call maybe, and then maybe like a little lower than 300, like a 295p. But even those are going to be pretty expensive. So just know that if you do plan on trading MongoDB, you're going to have to pay up. And it makes sense to pay up. It makes sense to pay up on both sides because this stock shows that it can consistently move. I'm personally not going to play Mongo today. I usually do trade its earnings almost every quarter, but something about this morning's drop and then the fact that we've caught and grinded back up just kind of like makes me shy away from it. I'm probably going to be very light with earnings this week just because of geopolitical kind of BS going on. But MongoDB can probably look aside from all the geopolitical stuff. So if you want to try, I definitely would suggest Mongo as a good candidate for earnings this week or this afternoon. I myself, like I said, I'm a little skittish, so I'm going to fade Mongo. The next one that we have is Credo. So Credo is another very consistent earnings mover. Not as consistent as Mongo, but not by that much off. It's not that far off, to be completely honest. I do like Credo today. The contract charts on everything that I've looked up, everything is getting kind of that shrug emoji, which means that candles are under the SMAs on short-term time frames. So momentum is not really there. But I think that this morning's drop and the grind up, I think that has affected all the contract charts today. So I'm more so just going to look at like volume over open interest. I like the volume over open interest for both of these strikes, the 95p and the 130. I think they're both slightly too far out of the money. 130 calls about like 14% out of the money. The 95p is 16, almost 17% out of the money downwards. So I would say that those 95p's are on the bid. I'm personally going to trade Credo. I currently have a strangle right now that I might add to one side. I have the 128 call for this week and I have the 100p for this week. So that's what I'm going to do for Credo. I might still be a little too far out of the money on either side. But I think I'm only going to do one earning strangle today, and that one's going to be Credo. So Credo, definitely a really good option. I like it personally. I'm going to trade it. I'm already in it. We'll see how it goes. Dave is another pretty decent one. Dave has one of the smallest floats I put together. It's got a float of 10 million shares. So if Dave gets if it gets good numbers tonight and it gets good forward guidance, or the opposite, bad numbers, bad forward guidance, Dave is definitely one that can move around pretty easily because it does have such a small float. I like both of these strikes actually that we're finding. So I like the 220 call. It's not that far out of the money. The 180p, not that bad. It's not that far out of the money either. So this looks like a classic strangle to me. It looks like people are buying the 220, and they're probably also buying the 180. The one thing that I thought was, and we do have, I forgot to go over narrative intel for Mongo and Credo, but both of those have really strong narrative intel. Dave, not so much, kind of a sleeper, so to speak. But like it says, if we get good guidance, this can definitely gap 10 to 20% on a re-rate. And if this morning's drop was fake and Dave gets good numbers, Dave's going to take advantage of not only its numbers and its earnings catalyst, but it's also going to take advantage of the macro market going up. So Dave might not be a bad one. I might have to get into this too. It's just the strangles are just a little too pricey for me at $5. If you can swing it, I think Dave is a pretty good strangle. So 220 call, 180p looks pretty decent for Dave. Pretty strong candidate. We'll look at some of the cheaper priced ones this afternoon, kind of the lower EL scores, but still good options. We have Oust, we have Lending Tree, both on kind of the cheaper share side, which I personally don't like because, like we've talked about in the past, a 10% move off $20 for Oust, you're looking at a $2 move, and a 10% move for Tree, you're looking at like a $3 or $4 move. So if you like those setups, those aren't bad candidates to go with because they do have a consistent move history or somewhat consistent move history. So if you like the cheaper stocks, Oust and Tree, you might want to look at them, although they're not really getting the best narrative intel right now with a caution sign. ASTS, this is one that kind of jumps out to me. I did see flow for ASTS on either side, so I think I saw 75p come in earlier. And I think I also saw like a 94, 95 call. So traders are definitely looking at ASTS. Probably off the heels of Rocket Lab, which reported last week. So like we talked about last week, there's that narrative. We had some quantum names last week. We had some quantum names this week. We had some rocket names last week. We have a couple of rocket names this week. So there's kind of a narrative there. Pretty good strikes that we're pulling up. The 100 call, this looks like to me it's a little too far out of the money. So probably a mix. I mean, that's a lot of volume. So it's probably a mix of bought and sold on that 100 call. The 75p, that's the one that popped up for me on one of my flow alerts earlier. So I think that one's definitely bought. This one, again, might not be a bad one to strangle. I might actually get in a strangle here on the 100 call and the 75p. I kind of like these prices. They're not too expensive. They're pretty manageable. So I'm gonna remember ASTS mentally. So far, definitely a lock for the Credo strangle, but ASTS is now making my list on the, getting up there a little bit. Asana, I don't like the narrative intel for Asana, but it does have a pretty good move history, right? Half the time it's moved over 10% up or down. There was a quarter pretty recently for Asana. I want to say maybe it was 2 or 3 quarters ago. I want to say it was up like 30 or 40%. So given the right kind of news or the right kind of numbers, this is definitely a stock that can move. It doesn't have a massive float for such a cheap stock, at around, like that $7 price, 86 million shares is not that many. So given the right environment, Asana is one that can move, although it is cheap. Cores, this is kind of an interesting one for me. I'm not going to trade it. I don't like the narrative intel on it, but it has gotten a lot of flow both ways I've seen in the past couple of weeks. So I've seen a lot of like 19 call flow. I've seen a lot of like 16p, 15.5p flow. So this is definitely one to keep an eye on. It's too cheap for me personally, so I'm going to fade it. But if you like this stuff, cores might be a decent one to go with. I would lean to the put side, but that's just me. This 14p, the volume over open interest, this looks pretty strong to me. These look like they. I mean, it's a cheaper stock, so it's really hard to tell just looking at the numbers right here if they're bought or sold. It's probably a mix, but that's a really big volume over the open interest that was just chilling there. So I would say majority of these are probably purchased, probably bought. So cores, I would lean put side. Gorilla, GRR, I don't like this company at all fundamentally. I remember looking at their website months ago, might have been, I don't know how many quarters ago it was. But man, they just have typos. Their website is just typo riddled. They had a couple of duplicate pages. You click on one thing, you're expecting to go look at one thing, and you're ending up just looking at the same page that you were looking at for something else. I can't think of the exact scenario, but GRR, I was not impressed with their website and just kind of like their management style and their management team when I looked at it last. But that was probably half a year ago or so. So maybe something has changed on Gorilla Technology, but I just don't like the company. I don't trade it, and I avoid its earnings. It's also too cheap, $12. It's way too cheap. If you're gonna trade Gorilla, you might as well just get shares, but something that you'd have to do your DD on before you did that. Anything else today? StoneCo, I kind of like StoneCo. So this is a cheap stock that I do kind of like just because of its narrative intel. It does have a really good chance for a guidance re-rate. So again, one of those stocks, if it does get good numbers, this thing can move well. Not a massive float. We're looking at like 243 million shares. So it's not tiny, but it's also not massive. So Stone is definitely one that can move if given the right environment. And we got 2 quarters out of the last 8. It's made a 10% up or down move. For me, it's a little too cheap, but if I was going to trade a cheap one today, I think it would be Stone and cores probably. Although I do like the narrative intel better on Stone. QUBT, there's one of our quantums that we talked about. I don't like the narrative intel on this, but it's definitely an option and it's too cheap for me. Not really seeing anything interesting as far as volume over open interest for any of these strikes. Not a great EL score, so QEBT is kind of off my list. Big Bear AI, this is kind of it's kind of a weird company. I don't personally like it. I think there are people out there that like trading it, but for me, again, just way too cheap of a stock. A 10% move, you're not looking at really much any movement at all. And it's not the smallest float, but it's also not the biggest. 431 million shares. I would kind of put that in kind of like the medium level. So Big Bear AI, an option if you like these cheapies. If you know something about Big Bear or you know something about AI that I don't know right now, then maybe a good one to trade, but I'm going to avoid it. So that's kind of what we're looking at for this afternoon. We got 8 minutes left, so we'll quickly look at tomorrow morning because there are some decent options. I might not be able to get time to post them on Twitter, but at least we can talk about them here. So we got Best Buy starting off the morning with Best Buy. Good narrative intel. Not the best move history. So only 3 quarters out of the last 8 has it gone over 10% up or down. And a 10% move off of Best Buy right now is about $6. This was close to like a $100 share stock at some point, maybe like a few quarters ago. But now it has definitely lost a little bit of its luster, and it's down to like that 61 range. I will say, and this is probably just because of where I live, but I did go to Best Buy and I bought a ton of equipment probably like a few weeks ago. And I mean, like I'm talking like thousands of dollars worth of equipment. And I go up to the counter, scan everything, and then the cashier was super awesome, super helpful, just kind of gave me the boxes of things. And I was like, do you guys have a bag? Nope, no bags. So I walked out of the store with probably like $3,500 worth of equipment in my arms. And I kind of thought that was a weird experience, kind of a weird customer experience. But nonetheless, I paid $3,500 to Best Buy, so that helps their bottom line, right? I just didn't have the best experience as a customer as far as kind of like taking the merchandise. But that might be just because of where I live. I don't know. Regardless, yeah, we have the strikes being pulled up for Best Buy. The 63 call really close to the money, as you can see, and we got the 60 put also very close to the money. So I don't think that people are expecting a big move for Best Buy. And if you're going to trade Best Buy, I think it's one that you're going to trade because of your own conviction, or it's because maybe like me, you had some sort of experience there and you're like, you know what, my lizard brain is telling me to take advantage of that. So I'm going to fade Best Buy. I do like these strikes. Both of these strikes look to me like they're bought. So if you like that kind of tight strangle, Best Buy might be a good option for you. Target we'll look at. Target used to be a pretty consistent earnings mover. It has since kind of I want to say maybe like the last couple of quarters, it kind of chopped or didn't make that big of a move. So it's off my radar a little bit, but there is good narrative intel for Target. If we do get a lot of good positive numbers and good guidance, then Target's definitely one that could move. It doesn't have a huge float. I would expect Target to have like a billion, 2 billion share float, but it's not even 500. It's 451 million shares. So it can definitely move, and I think that's why it's moved in the past. But recent quarters, it hasn't really done anything impressive. The strikes that are coming in, the 125 call, 10.5% out of the money. That strike price to me looks like they're being sold. The 100p, it's like 11.5% out of the money. That strike price also looks like it's being sold to me. So I don't think people are expecting a huge move in Target. That's why they're probably selling the strikes that are pretty far out of the money, or what they consider to be far out of the money. So Target is a fade from me. C is a open C limited. Like this is also a very consistent, or used to be a very consistent earnings mover. Not so much anymore, but definitely has a much better narrative intel than Target. So if you are going to choose between C and Target, I would certainly choose C or SE. This is an interesting strangle. I like this 110 call. I like that. I like the strike price, $4 or so. The volume over open interest, that tells me these are definitely purchased. So people came in and they bought the 110 call. I can almost bet that just looking at it right here. The 104p, and they're probably hedging buying the 104p. So this is a classic strangle. Again, with I think what we looked at earlier, maybe a Credo or one of those classic strangle prices. Both of these look like they're bought to me. So definitely a good strangle to take advantage of. The only thing I don't like is this move, 3 out of 8. If C was like a 6 or a 7 mover out of 8, I would feel a little bit more comfortable in getting this strangle, paying up for it. But I personally only go for stocks that have like a 5, 6, 7, 8 move history. And so as such, I'll be fading C, but it's definitely not a bad look. So if you're trading C, these are good strikes to look at, and I think you're in the. I think you might get a move either way, but just doesn't have a great consistent history. So I will be fading. On holding. So the shoe sneaker company, Deck is the other shoe sneaker company. They do the Hokas. On is what the cloud, like the cloud tech shoes. I think Deck does Hoka and they do Uggs. They probably do other stuff too, but on would be like the competitor for that. So much cheaper share price than Deck, but probably a much different looking share structure. On definitely has more shares in its float than Deck does, and so it's a little harder to move. These are really interesting strikes. This volume over OI for the 50 call is massive. Well, it's not even over, but it's close and it's massive. This is also really this 42p. These are definitely hedges. They have to be. If they were all purchased today and there was only one contract on the OI before, they got to be hedges. They got to be people buying that 42p to hedge. So I'm gonna fade on because a 10% move is like $4 or $5, and that's not something that interests me or intrigues me. But if you are into that whole like retailer kind of environment, you like that kind of stuff. If you're a sneakerhead and you like playing things like Deck and DKS, on maybe not so bad. But I'm not seeing anything that really excites me about it. Thor Industries not into it. Viking Holdings not into it. Maybe a little Viking. I don't know. It doesn't no quarters previous has it moved over 10%. So I don't really. That's immediately off my my radar. But this is interesting, and these are actually really close to the money too. So the 75 call, it's only 1.5% out of the money. The 70 put only 5.5% out of the money. So too close to the money for me. To be honest, I think I'm only going to stick with the Credo Strangle. I only have a minute, but I am not really liking anything else. GitLab, that made a weird move down last quarter. I can't stand this stock. Every time I trade it, it chops, so I'm just going to fade it off the bat. I also just don't like GitLab as a company. CrowdStrike, maybe there's some juice here with cybersecurity stuff. Remember Cloud and Anthropic last week kind of scaring a lot of cybersecurity companies. So maybe there's something with CrowdStrike. Decent narrative intel. And this is, I mean, that volume over OI for the 400 call is really interesting, but a little too pricey for me off the heels of that weird dip this morning and all the geopolitical BS going on. So crowd for me is a fade, and it's 4 o'clock, so we're too late anyways. But I think we got through most of them, most of the good ones today. Oh, crowd is tomorrow, so forget that. And GitLab is tomorrow. I got ahead of myself, so forget those. But GitLab's going to be a fade regardless because I hate GitLab. But that's what we got for this afternoon and tomorrow morning. I didn't get on as soon as I wanted to this afternoon. But we have some really good options for the end of the week. I'll probably get on tomorrow, hopefully get on Wednesday, and maybe even Thursday afternoon. But while we're here, I might as well and go ahead and look at the pick'em, maybe place some live bets. As you can see, well, here's what we got this week. And MongoDB was our first option, so obviously the market closed, and Mongo is not an option for us to bet on anymore. But we have CrowdStrike, Okta, and Sienna for the rest of the week. As you can see, I've already placed 200, a tiny little 160 on up for Sienna. It's close to all-time highs. So anything, usually a trend in motion is much more likely to continue than reverse. So I'm going to bet Sienna up. And actually, one thing I thought was interesting with all 4 of these stocks, MongoDB, CrowdStrike, Okta, and Sienna, all of them on the last earnings report went up after they reported, which was interesting to me. Okta, Crowd, I'm going to say down on Crowd. I think that the Claude, Anthropic, cybersecurity thing, I feel like the CEO is probably going to talk a little bit about that. And I can also see the CEO coming out and saying, giving good numbers or giving decent numbers, maybe inline numbers, and then maybe even kind of quelling concerns, can kind of come out and say, you know what, like we understand about Claude's capabilities, we understand Anthropic's and AI's capabilities. However, we have X, Y, Z to combat that and be competitive. I can kind of see it going either way. And I think I just talked myself into an up for Crowd. So I'm going to do, and I don't want to do too much on it just because I don't have the best confidence in up. So I'll put 100 on up. And then Okta, I don't really have a ton of feelings on Okta. We'll do 100 on down for Okta. So I'm going to go 100 up for CrowdStrike, 100 down for Okta, and 160 on up for Sienna. So I'll place those 2 remaining bets, and we'll hope that one of them hits. Top of our leaderboard. Our leaderboard has changed a little bit. So obviously people have bets out there, and because people have bets out there, see a new droid as our first place person. It was Timbo, but it looks like Timbo spent a little bit of money on EL Pick'em this week. A couple of people have some bets out there, so we'll just have to see how things shake out for earnings Pick'em this week. It's gonna be a really interesting one. But the focus for this afternoon is definitely going to be MongoDB and Credo and Dave. Those 3 are going to be probably the best ones to watch in terms of an earnings reaction. So hopefully this was helpful for you. If you have any suggestions for me, anything that I can do to make this stream a little bit more informative or educational, please let me know. The goal of this is for us to find the best earnings movers every single day, and then take a strangle or an option or an earnings lotto either way, and then make money. Obviously, that's the number one goal. So like and subscribe to the YouTube account, like the video, like the live, and I will see you all tomorrow. Best of luck. I hope you hit a banger.